Welcome, everyone, to today's deep dive. Today is May 16th, 2026, and we are jumping right into a debate that is pretty much everywhere right now.
Yeah, you really can't escape it.
I mean, it's the fiercest debate running through the American economy today. Basically, are people actually losing their jobs because of artificial intelligence, or, and this is a big or, is the broader economy actually to blame?
Right. And, we're really looking at a classic signal versus noise problem here. Getting the answer right dictates not just like corporate strategy, but how you navigate your own career over the next decade.
Oh, totally. Which is why we need to look at today's source material. We're pulling from a short, but honestly incredibly revealing news summary from llmtracker.d.
It's a fascinating piece.
It really is. But okay, let's unpack this right off the bat because the craziest detail is who actually wrote it.
Yeah, this is the irony of a whole situation.
Right. The author's name is Vika Ray. But Vika Ray is not a human being. It is a virtual AI analyst.
Yeah.
It's an automated agent developed by this automation agency in Germany called Algorand.
Which naturally makes you do a bit of a double take.
A massive double take. I mean, my immediate reaction is just to question the messenger here.
Sure, of course.
We have an artificial intelligence autonomously scraping the internet, right? To report on human panic about artificial intelligence taking jobs.
Bit on the nose.
It feels like the Fox delivering the evening news on henhouse security.
Right.
Like, can we genuinely trust an algorithm's summary of our own economic anxiety?
Well, the skepticism is totally warranted. Any source evaluating its own underlying technology obviously requires scrutiny.
Exactly.
But, and this is key, the value in this specific report isn't in some philosophical conclusion that Vika Ray hallucinated.
Okay, so what is the value then?
The value is just the brute force aggregation of data. This agent pulled official government statistics and it processed real-time sentiment across these massive, highly technical forums.
Oh, I see. Just looking at the raw numbers and the chatter.
Right. So our goal in this deep dive is to isolate that data. We're going to look past all that visceral, emotional fear that kind of clouds the AI labor conversation, and we're going to examine what the hard numbers and the frontline tech workers themselves are actually saying.
Okay, I like that. We will put the irony of the robotic messenger on the back burner for a minute.
Sounds good.
So let's tackle the dominant narrative, because if you open, literally any financial app or tech blog right now, the story being pushed is really aggressive.
Oh, it's apocalyptic.
Yeah. They're saying AI-driven labor disruption is not like a 2030 problem. It is a today problem.
That's the narrative.
And specific roles are supposedly in the crosshairs. We're talking technical writers, graphic designers, various creative or mid-level data entry positions. The media is painting this picture of entire floors of office buildings just being hollowed out overnight.
Well, the media thrives on discrete, catastrophic events, right? A slow, systemic shift just doesn't generate the same engagement or clicks.
That's true.
But what's fascinating here is when Vika Ray's analysis cross-references that catastrophic narrative against the official Bureau of Labor Statistics, the BLS data.
Okay. And what does the BLS actually say?
The picture totally fractures. The BLS presents a much more nuanced reality. They're showing only what they classify as, quote, modest declines in these affected categories.
Wait, really? Just modest declines?
Yeah, we're looking at fractional percentage drops in overall employment for these sectors, not the 40 or 50% wipeouts that the media implies.
Wow.
And furthermore, many AI-adjacent technical roles are actually experiencing growth right now.
Okay, but let me push back on that for a second. Using the BLS to debunk this feels a little risky.
How so?
Well, because BLS data is notoriously lagging, right?
Yeah.
Their establishment survey looks in the rearview mirror. Those numbers get revised for months after they're published.
That is absolutely true.
And meanwhile, the financial media is reporting on real-time WARN Act notices. They are seeing severance packages being handed out, like this morning.
Right. They see the immediate action.
Yeah. So, isn't it highly probable that we're suffering from an economic placebo effect? Like, if the media keeps blasting this AI labor collapse narrative, are companies and workers just assuming the sky is falling even when the BLS data says not so fast?
Well, that lag you mentioned is a fundamental characteristic of labor economics. It's real.
Yeah.
However, even if we account for, say, a 3 to 6 month delay in the data, the leading indicators would still be flashing bright red if a structural wipeout was underway.
Which indicators do you mean?
Things like initial jobless claims in specific metropolitan tech hubs. We would see undeniable, localized spikes in unemployment filings in places like San Francisco, Austin, Seattle.
But we aren't seeing that.
No, we really aren't. What the hard data actually shows is a reallocation.
A reallocation, what does that look like in practice?
So imagine a technical writer who historically spent 40 hours a week drafting manuals from scratch.
Okay.
Now, maybe they're spending 20 hours prompting a large language model and then 20 hours editing its output.
Ah, I see.
So the role might shrink in headcount marginally, yes, but it also evolves. That person isn't necessarily unemployed. Their job title and function are just shifting.
Which creates a massive psychological gap, right? Because the worker's reading like 10 articles a week about their impending obsolescence.
Okay.
And every time their company announces even a minor restructuring, they just assume the algorithm finally came for them. It becomes this self-fulfilling prophecy of panic.
And that panic cascades through corporate hierarchies incredibly quickly.
Oh, I bet.
I mean, picture a board of directors. They're being hammered with the narrative that their competitors are achieving 30% efficiency gains through AI. So what do?
They pressure the CEO.
Right, and the CEO pressures the department heads. Suddenly, you have middle managers looking at their creative and data teams through this lens of impending automation, even if the tools aren't actually sophisticated enough to replace those teams yet.
Right. It's just the fear driving the decisions.
Exactly. So the modest decline in the BLS records is real. People were losing jobs. But the root cause of that pain is being completely misattributed.
Okay, well, this naturally leads us to the next big question. Because if the official BLS data says AI isn't causing a massive job collapse, we really have to ask why the labor market feels so unstable to everyone right now.
We do. And that leads us away from the technology itself.
Exactly. It points straight toward the broader economy, which the source material gets into. Vicaray lists out these massive macro factors: tariff pressures, energy market volatility, and just general recessionary headwinds.
Yes, those are the real heavy anchors right now.
It's like trying to figure out if your houseplant died because you overwatered it, or because the heater broke, or because you just left it in the dark.
That's a great way to put it.
Right. Like, how on earth do economists cleanly attribute a job loss to AI when all these massive global macro factors are slamming the economy at the exact same time?
Well, they can't. And what you're talking about is a concept called clean attribution, which the text highlights.
Clean attribution. Tell me more about that.
So think about it like a laboratory setting. If you give a patient a new experimental drug and their blood pressure drops, you have clean attribution. The drug caused the drop.
Okay, straightforward enough.
But the current economy is like a patient who has the experimental drug, but they also have pneumonia, a broken leg, and a severe fever.
Yikes. Okay.
Right. So if their blood pressure drops, attributing it solely to the new drug is essentially scientific malpractice.
So in this case, the tariffs and the unpredictable energy markets are the pneumonia and the fever.
Precisely. Let's look at the mechanics of those macroeconomic factors for a second.
Okay.
Tech companies, especially the ones operating data centers or managing huge supply chains, are unbelievably sensitive to energy volatility.
Because training these AI models takes so much power, right?
Staggering amounts of electricity. If power purchase agreements spike by 30% due to, say, global energy market turbulence, a company's profit margin just evaporates. Add in new tariff pressures that instantly raise the cost of hardware imports, the servers, the GPUs, all the silicon required to build out that infrastructure.
So the cost of simply keeping the lights on and the servers humming just skyrockets overnight.
Exactly. And at the exact same time, you have these recessionary headwinds, which means enterprise clients are tightening their belts. They aren't renewing their software licenses.
So the company's operating costs explode while their revenue growth stalls.
Right. And to survive that, they have to slash payroll.
Which brings us to the boardroom PR strategy. And honestly, this is where it gets incredibly cynical to me.
It really does.
Because if you're a CEO facing that reality, you have to write a press release explaining why you're laying off 10% of your workforce.
Yep.
You can either tell Wall Street, hey, we failed to hedge our energy costs, we're getting crushed by tariffs, and our clients are leaving us because of a recession.
Which Wall Street will punish you for.
Right. Or you can say, we are aggressively restructuring our workforce to align with a streamlined, AI-driven future.
And there's the smokescreen.
It's the perfect cover. It allows leadership to frame a reactive, painful, cost-cutting measure as this proactive, visionary leap into the future.
It's much easier to vaguely blame restructuring for an AI future than to admit you're struggling with recessionary headwinds. And the stock market actually rewards tech-forward efficiency.
Oh, absolutely. And the financial media is already primed to publish any story about AI disruption, so they essentially launder the press release. They print the narrative without actually digging into the company's quarterly filings to see that the real culprit was a massive spike in raw operational costs.
The lack of clean attribution is what allows that alibi to hold up in the court of public opinion.
The technology is literally taking the fall for traditional economic mismanagement.
Exactly. Economists struggle to untangle the variables, the media amplifies the dramatic angle, and corporate leadership gets a free pass.
Unbelievable. Well, if economists and official data are presenting this murky picture and CEOs are deploying PR smokescreens, we have to look somewhere else.
We need to look at the view from the trenches.
Exactly, the actual tech workers on the front lines. And this is where Vika Ray's methodology gets super fascinating. To get the pulse of the internet, the AI ran a sweeping sentiment analysis across Hacker News and Reddit.
Right, because these are the core communities where developers and engineers actually talk.
Yeah, when they aren't on LinkedIn trying to impress recruiters.
Exactly.
So Vika Ray breaks down the sentiment of these communities, and the data reveals 8% positive, 27% neutral, and a whopping 65% critical.
That's a massive critical block.
It is. And here's where it gets really interesting. When we look at that 65%, are these communities critical because they are terrified AI is taking their jobs? Or are they critical of the media narrative about AI taking their jobs?
That's the million-dollar question.
Yeah.
And Vika Ray's natural language processing algorithms had to distinguish between those two things.
Then what did it find?
It categorized this dominant segment as exhibiting, quote, measured skepticism.
The measured skepticism.
Yes, they are not a terrified mob. They are profoundly critical of the hype cycle itself.
Ah, so they are blaming the recessionary forces, not a structural AI displacement.
Exactly. A clear majority see the macro weakness. They spend their days fighting to get these LLMs to just accurately parse a basic CSV file, so they are openly mocking the sweeping media narratives.
But wait, I have to ask, how does an AI even figure that out?
What do you mean?
Well, Hacker News and these specific subreddits are steeped in layers of irony, sarcasm, and highly technical inside jokes, right?
Oh, heavily.
So if a user posts something like, oh great, another LLM that can't write a recursive function, guess I'll pack up my desk. How does Vika Ray know that's measured skepticism and not actual despair?
It's a great question. Modern sentiment analysis doesn't just rely on simple keyword matching anymore. It evaluates contextual vector.
Contextual vectors.
Yeah. Vika Ray would analyze the linguistic patterns surrounding the keywords. The AI looks at upvote ratios, the density of technical jargon used in the counterarguments, and even the historical behavior of the forum.
Oh, wow. So it's looking at the whole ecosystem of the thread.
Exactly. When the algorithm sees users systematically dismantling a sensationalized news article by pointing out the actual computational limits of a model, it codes that interaction as technical skepticism, not economic panic.
So the algorithm is literally watching human engineers tear apart the media's understanding of algorithms.
Exactly.
That is incredible. And what these engineers are consistently pointing to is the exact macro environment we were just talking about.
Right. They see the hiring freezes, they see the canceled projects, and they attribute it to the cost of capital.
Because they know that when interest rates are high and venture capital dries up, the experimental tech projects are the first to get axed.
Precisely. The community is experiencing intense fatigue with what the report calls LinkedIn-style AI narratives.
Oh, we all know those. The threads that start with, I just automated my entire software company using one prompt. Here are 10 ways you can too.
Yes. The frontline workers are repulsed by it, and they actively dismiss fringe voices pushing AGI-level alarmism.
Right, the idea of artificial general intelligence coming for every human task.
Yeah, they view that alarmism as pure hyperbole, completely disconnected from the frustrating incremental reality of actually deploying these models.
Okay, but we do need to make sure we aren't swinging the pendulum completely in the other direction here.
What do you mean?
Well, the sentiment analysis didn't come back 100% skeptical. They aren't living in a state of denial, right?
No, absolutely not. The nuance here is critical.
Because they do acknowledge genuine AI exposure in specific creative and technical roles, right?
Yes, they do. A subset of these communities sees the writing on the wall for specific tasks. They know that generating boilerplate code, drafting routine documentation, and basic data synthesis are being rapidly commoditized.
So they see the pressure points.
They see the pressure points, but they reject the apocalyptic framing.
Ah, I get it.
They view AI as a brute force lever that alters the workflow, but not as an autonomous entity capable of orchestrating a structural collapse of the global labor market.
So it's kind of the difference between a controlled demolition of a single condemned building and a meteor striking the city. They know a building is coming down, but they aren't, like, running for the bunkers.
Exactly. It's a grounded assessment based on mechanical reality
Mm.
rather than romanticized terror based on science fiction.
I love that. Okay, so let's pull all these threads together for everyone listening.
Let's do it.
The media wants you to believe robots are coming for your desk because structural collapse sells. Corporate leadership needs a scapegoat to cover for the fact that tariffs, energy volatility, and a shrinking economy are destroying their margins.
Which makes AI the perfect PR cover.
Exactly. But when you bypass all that noise and look at the sluggish reality of the official BLS data,
And when you parse the cynical, unfiltered sentiment of the smartest tech communities on the internet,
right, the panic just dissolves into something much more grounded.
we are just experiencing a painful, cyclical economic contraction, but it's heavily disguised by a massive technological hype cycle.
So what does this all mean for you, the listener? It means you really don't need to panic over every viral post predicting the end of human labor. The friction in the job market is incredibly real, but the monster under the bed isn't the algorithm.
No, it's the same traditional economic forces that have driven boom and bust cycles for a century.
Which perfectly sets up a final, provocative thought to mull over, one that was kind of buried at the end of the Algorand report.
Yes, this is a crucial takeaway.
When Vika Ray analyzed what the engineers on Hacker News and Reddit were actively discussing, they weren't obsessing over the latest capabilities of generative models.
No, the AI noted that these core tech communities are increasingly hyper-focused on macro trading signals.
Which is wild. Explain the mechanics of that. What are these developers actually looking at?
Well, they are watching the 10-year Treasury yield. They are tracking the monthly consumer price index prints to gauge inflation. They are looking at commodity futures and energy market forecasts.
So the people writing the code have realized that their job security isn't dictated by the efficiency of their neural networks.
Exactly. It is dictated by the cost of borrowing money and the price of electricity.
The people building the future are literally glued to Bloomberg terminals, watching the most traditional economic indicators on the planet.
It's a massive reality check.
It really is. If the very engineers and developers who are building these AI tools are more worried about energy markets and tariffs than they are about their own algorithms replacing the workforce, well, shouldn't the rest of us be completely recalibrating what we fear about the future of our own jobs?